startups launch and how less money they may need to get the engines going. Yeah.
Yeah, absolutely. I think there's been a lot of talk, in the broader kind of social media ecosystem around kind of the one person, billion-dollar company.
Right.
And I think that is a reflection of this kind of principle or idea.
This is Alistair, and welcome back to the Venture Variety Show. This podcast is where I talk with founders, investors, and operators who are shaping how startups and the stories around them get built. Today, I'm joined by Arjun Dev Arora. He's an advisor, an investor, and an all-around venture whisperer. He works with founders, fund managers, and LPs, and this gives them a unique perspective on what's actually happening behind the scenes right now. Arjun and I talk about how AI is creating a new wave of leaner startups, how emerging managers are surviving this market, and he offers what it'll take to raise your next round, especially if you're stuck between Series B and C. So let's get into it and meet Arjun. Arjun, how are you?
Good, doing well. Thanks for having me.
Yeah, great. Yeah, I've been looking forward to this. No one touches more things in venture than I think you do. Your experience and your work crosses across startup founders and VCs and LPs. So looking forward to this.
Oh, thank you.
Well, great. Well, first of all, introduce yourself. Tell us who you are and what you do.
Yeah, thanks so much. My name is Arjun Dev Arora. I've been kind of in the broader startup and venture ecosystem for probably 20 years now, but these days I've been spending my time, mostly working with founders and fund managers and LPs. So spend my time kind of as a key advisor, consigliere, coach to a handful of wonderful founders who are kind of venture-backed and hyper-growth. And then similarly, kind of working with a handful of great emerging and emerged fund managers and supporting them, again, as their kind of key advisor and supporter on all things from fund strategy, portfolio math, fundraising, upstream and downstream capital, and even topics like succession planning and partner dynamics. So cover a lot with the fund managers as well. And then the last little bit of time is with LPs, kind of binary between emerging LPs, folks who are relatively new to the asset class, just helping to, connect folks in, educate LPs on kind of the asset class writ large. And then I spend a decent amount of time with folks who have been doing this for a very long time.
When you mention founders, primarily you work with early stage.
Yeah, I'd say mostly kind of seed through Series C is where I spend my time, kind of as they're institutionalizing and going through their kind of various growth and inflection points. Yeah.
Well, it's always an interesting time in venture, and probably more so
Yes.
in the last few years. But I would love to hear your take on liquidity coming, outlook on. It seems like a little bit of a opening of the IPO window, and maybe. I'd also like to point out that we've seen some fundraising, not as much as in previous couple of years, but still some pretty good fund closes we've seen lately.
Yeah.
So what's your take?
Yeah, definitely. So starting maybe from the seed stage side and then working my way up to kind of some of the more recent IPOs. But I think on the seed and pre-seed side, I think the bar has definitely gotten higher. I think that might be a function of AI, writ large, or just generally the expectation in this market environment to de-risk things given, the harder time it has taken for fund managers to raise. So that has, of course, downstream implications. But, those rounds are getting done. So that is something that I'm seeing out there. They're protracted, certainly from, the action of 2020 and 2021. They're taking a little bit longer. You have to have more conversations. You're, spending more time kind of unpacking some of the nuance of the business model, but, they are getting done, which is great. On the Series A side, I think, similarly, things are getting done, especially if it's obviously in AI and the deals are hot, it's happening. But for someone who may be AI adjacent and or maybe not growing as quickly, those rounds are definitely taking much longer. And in some cases, folks are doing seed bridges and kind of coming back to the market, a little bit later. So there is activity in that kind of stage, but the bar is significantly higher. And some folks are just not getting those rounds done. At the B and C, that's where I think things have been, particularly challenging. And that's been a space where it's been most probably difficult for folks, particularly in the last couple of years. But, there's some cracks there. And I think things are starting to genuinely improve.
Going back to your comment about Series B and C, I mean, if that stage is having a little bit of difficulty, does that just lend itself to alternative financing debt?
Yeah.
Is that what you're seeing?
and layoffs and other just kind of challenges that are happening in that space. So I've seen kind of multiple rounds of layoffs. I've seen bridge rounds, some degree of debt financing, but that's also pretty hard to do. I've even seen something where folks have basically effectively collateralized their IP and borrowed against it. So I've seen all kinds of crazy ways that folks have tried to navigate through this particular time. But a lot of it has ultimately been, I think, cost cutting driven. And that's the way folks have survived. And so I think there's been a handful of those companies that were able to raise a big chunk of money in 21 or 22, and then they've been very thoughtful on managing it, and have been able to kind of navigate through it after multiple cuts and kind of moving more towards profitability. So I think the majority of folks that have managed through have done that. Some of those companies are still, very much in kind of zombie mode. And I think they'll either end up getting, acquired. Maybe they won't end up clearing the preference stack, but, they're still kind of around. And I think some folks are just continuing to wait to see if markets improve. But I can't imagine that unless they've really been thoughtful about integrating AI or found a way to accelerate growth in a profitable fashion, that they're going to, be able to raise in a meaningful capacity when and as the markets improve. So it's been I think it's been probably the toughest time for the CEOs of those companies out in the market right now.
How is
Yeah.
AI impacting, fundraising, valuations, investor behavior? What are you saying?
Yeah, I think what's interesting is we've already kind of gone through a wave of kind of AI excitement, and then we've kind of crashed, and we're now kind of coming back. So I think we've hit the trough of disillusionment in some way and are coming back. And particularly, I think on the application layer, initially there was just this general kind of excitement around, hey, we're going to invest in anything that has AI in it and let's go do it. And I think eventually there was a reckoning and a realization that, hey, it actually has to solve a real customer problem, has to, actually drive value for the end user. And then there's kind of hard reset. And so now I think there's a set of companies that are application layer AI that are vertical in nature, that are growing and scaling very quickly, that are getting a ton of kind of investor interest. And they're doing it from more of a first principles method in terms of building a real business, leveraging the technology rather than letting the technology lead the hype and the excitement. So that, I think, is what I'm seeing now. And I'm frankly personally excited about that. I think that's a good place to be. There's a whole other category of companies that were maybe from the first wave, the kind of workflow SaaS software wave, which are now integrating AI in a really thoughtful way and having the AI run those workflows. So these might be your Series A, B, and C companies that are appropriately injecting AI and pivoting in a way that allows them to, not even pivoting, just probably more building upon what they've already built from a workflow perspective, adding kind of an appropriate agentic layer to take some of those actions that maybe humans were doing before. And that as a kind of a new tranche of maybe later stage companies that are getting, some meaningful interest in the venture community. Yeah.
What's your best advice for founders in today's market, whether they're, AI specific or just trying to
Yeah.
move
I
ahead?
think that, given where the market is today, I think it still requires a very sharp awareness on kind of the realities of the market. And so I think thoughtful growth and a line of sight on profitability, unless you are in a space in which there's extreme and hyper growth and you've really nailed product market fit and, you found one of these kind of cursor like exponential, growth opportunities. Sure. Those are far and few between. It's kind of one out of, 10,000 or probably less companies that can hit that, level of extreme growth. So I think for everyone else, it's, thoughtfully integrating AI to help with all the various kind of points of efficiency, whether it's on your engineering team, your product team, in your kind of customer success motion to kind of, adjust and bring down costs as appropriate and focus on growth. And then it's making sure that, you're keeping an eye on where the market is as you're thinking about your next round of financing. And if possible, probably pushing it out, ideally till the fall. But if you're getting pull and things are working, then, exploring around, now, and then, be very market aware so that when things do tip, you can kind of accelerate and raise the capital you need to scale with that kind of core foundation in place.
Are you seeing more startups use AI for back office functions, reducing headcount by, using AI to take care of certain tasks?
Yeah, I'd say definitely starting to see, those sort of things filter in. And sometimes it's happening through software that they're using that has integrated AI. So it might be one of their current vendors that's actually doing that in a thoughtful way. And then in some cases, I'm seeing some, really sharp teams that are looking at their entire set of workflows and reimagining them, with AI. And because their engineering teams are incredibly strong and they might even have someone kind of on an internal tooling, team at the company, that person is then looking at the workflows inside the business and saying, hey, here's a place where we can interject AI and optimize that internal workflow. So I think those definitely seeing that across the board, and everything from kind of website, speed and, engineering excellence all the way to go to market, research on understanding, is this person fit your ICP or not? So all of that is kind of now being touched by AI. And I think the best founders are actively thoughtful about integrating that into their workflows.
Sure thing. I'm reminded of how, decades ago, excuse me, we saw AWS take off, and
Mm.
that really impacted seed stage. It was easier to
Yeah.
launch as a company. Is the use of AI, implementing that, is that going to be equally as transformative? Is that going to change how
Yeah.
easily startups launch, and
Mhm.
how less money they may need to get the engines going? Yeah.
Yeah, absolutely. I think there's been a lot of talk, in the broader kind of social media ecosystem around kind of the one person, billion-dollar
Right.
company. And
Right.
I think that is a reflection of this kind of principle or idea. And I think is, the first wave of kind of seed stage investing. Think of what is now known as Uncork, 500 startups, Floodgate, that whole crowd, I think really was inflected because of this understanding that AWS and the cost of startups was going to come down, and you could
Absolutely.
do things like a pre-seed or what at the time was a seed round. And I think there is, this kind of new wave of companies that are being started and accelerated, relatively quickly because of AI. And this may, I think, produce a new set of emerging managers that ultimately become emerged, managers, and the next wave that really understand this, principle at a core level and can build the right financing structure to allow these companies to kind of grow and scale. And so as we're seeing a lot more creativity in the broader venture asset class, as the asset class itself is maturing, I think there's just ways to finance businesses. And so I think we've heard of these things, kind of seed strapping, of taking a business, just injecting a seed round, and then through the use of AI and other just general scrappiness, being able to kind of bootstrap from there going forward. So there's these new kind of things that are showing up, and I think they're all going to require new financing models. Or, General Catalyst has their entity that's basically financing customer acquisition, and doing that, in a debt-like structure that doesn't take any equity, because people are able to kind of hit this inflection point of growth, relatively early, and they don't need subsequent rounds of financing, BC or later. So there's a lot of, I think, things that are already starting to show up in the broader asset class that are a
Yeah.
reflection of the fact that, AI is making things cheaper and faster to kind of get to scale. So, I'd say not only is it already happening, but I think the financial structure around venture is already adapting to that change.
Yeah. Interesting to watch for
Hmm.
sure. Let's get back to the topic of investing.
Yeah.
Is everyone active? Are we still seeing firms, kind of on standby mode, or do you think everyone is active?
Yeah, I'd say they're, still at the kind of B and C stage. It
Yeah.
feels like, yes, they are active, but they're nowhere near as active, as they were before. I think when the interest rate environment changed a short while back, I think there were some LPs that were telling their, late stage investors to just take the year off. I think that year in some cases has now extended into multiple years. Not that that's fully off, but that, it's been more of a focus on supporting their portfolio companies navigate through some of these cost cutting and bridge rounds and, past the profitability questions. And now I think as we're coming out of that, they're starting to get a little bit more active. And certainly on the AI side, there's been a lot of, very exciting action. But I'd say in the broader ecosystem, it's clear the data shows that, the number of deals and outside of AI in particular, and just generally, has decreased significantly. So, I think that crowd, though, feels like it's starting to wake up. And I think particularly on the back of some of these IPOs, and other just liquidity returning to the ecosystem, hopefully the ability to raise subsequent funds will improve with that happening. And therefore people can start to feel a little bit safer in the ability to write checks, knowing that they can raise the next fund, not that they'll write those checks and be out of market for a long time. So that, I think, is a shift that's happening.
I was thinking, boy, you've done it all. An investor, advisor,
Yeah.
you work with LPs, founders. Is there any one part of this that you enjoy the most?
Yeah, it's I really do enjoy it all. I
Yeah.
think yeah, I love working with founders and as they're kind of hitting that key inflection point of growth and being able to, see them early and support them through that. That similar kind of principle for fund managers
Hmm.
where say on average I probably work with a fund, 2.5, fund three as they're kind of institutionalizing and getting ready to become a platform and actually scale their systems and processes and messaging and kind of positioning to the market and to LPs as well. So I like, there's one thing I probably enjoy the most across both founders and fund managers is that inflection point. So being in a little bit early and then watching that kind of happen and then inflect, there's something special about that. But applying that kind of in a meta way across both founders and fund managers is where I like to spend time.
Speaking of fund managers, on the topic of emerging fund managers in VC, what's your take? Is it, are times tough? Is it,
Mhm.
what's your take on the current state for emerging managers?
Yeah, it's been rough, very rough out there. I think, a lot of folks have navigated, but I do feel like this particular kind of cohort of emerging fund managers is incredibly gritty and creative. And I think is learning the first principles of raising capital for a fund. And I think the right way because of the realities of the market. And I think I'm excited for this cohort as the market hopefully does improve the back half of this decade. I think they're going to be incredibly well positioned because they're going to have been very thoughtful in terms of their portfolio math, their kind of IR first principles, and then just the diligence required to ensure that a company meets the bar given the fundraising environment is so challenging. That those kind of reps that have happened across all those vectors are going to produce, I think, some stellar, fund managers into the back half of this decade.
What are we seeing with the current wave of LPs? You work with
Yeah.
some family offices. I mean, are you seeing
Yeah.
more coming into the asset class?
I think there's a tried and true set of kind of, fund to funds and alternative asset manager entities that have stayed the course and understand that, this is these cycles come and go and, they've done a great job. Maybe, point shout out David Clark at VenCap as somebody who's kind of played that role for a long time. I think there's other entities, like Vanderbilt University that have recognized that this is a great time to invest in the asset class and kind of showed up investing in emerging and emerge. And I think that's been awesome to see kind of an awareness around why this moment is an important moment to be in venture and are acting against that. And then I think there's a whole set of what I would call emerging LPs or folks that are coming into the asset class. And those LPs are excited about venture as a whole. They're kind of coming in, they're learning, they're getting educated, they're meeting with managers, they're making, allocations. And this tend to be, a lot of international folks, but also folks from Texas and Los Angeles and Chicago, are coming into the asset class, recognizing, the opportunity that's here and knowing that now is a good time.
Is there anything different with the family offices that you're seeing today?
Yeah. I think on the, the family office side, I think just more of an awareness and education on venture as a whole has really happened in the last few years. And so there are some folks that are now broaching the co-invest conversation, much more. And I think are doing it from a thoughtful place. So they have been investing in funds and are now coming into co-invest, having had the experience of investing in funds and learning, kind of how this asset class works. And I think those folks are going to do incredibly well because they've been thoughtful about it. I think in the prior cycle, we saw folks that just jumped right into doing direct deals and bluntly, unfortunately, got burned doing so and probably shouldn't have done that, to be frank. And now I think there's an awareness and an understanding that it's better to kind of build some track record, some network, some understanding with investing in funds first, and then kind of go do the co-invest thing, and then possibly do the direct thing. One very large entity in particular that's in all the usual suspects, kind of the large multi-stage funds, is now kind of opening up their co-invest program. So that was encouraging to hear, and also great for the ecosystem because I think there'll be new capital that enters, particularly for kind of later stage deals, B, C, D sort of opportunities. So once you have a quality lead, you'll be able to backfill with, 5, 10, $15 million from some of these other LPs that are now entering in a co-invest capacity.
Yeah, it'll be interesting to see, as you say, high tides lift all the boats, and
Yep.
yeah, the more momentum we see, the more opportunities for everyone, emerging managers and
Mhm.
founders.
Yep.
So winding down here, wrap us up. I mean, what are your thoughts on what's your outlook?
Yeah, our outlook is, because I'm in this game, I'm probably just generally very much a lifetime optimist. So while the last few years were pretty hard, I do think looking, towards the back half of 25 and into 26 as more of this liquidity returns, I think with, the liquidity returning coupled with the efficiencies and opportunities with AI. And one thing we didn't touch on, but I'm incredibly excited about is just Deeptech and kind of what's happening in, the built world as well, whether it's everything from, defense tech to manufacturing to shipbuilding to, physical products that are integrating AI in some way and those that aren't. That whole universe of kind of innovation space, of course, also fits in that category where I've been spending some time personally, and I'm just also very excited about that. So I think those kind of tectonic forces at play, returning liquidity, AI, and kind of this focus on the built world or the real world through Deeptech and other things, I think are going to lead to a really exciting, coming 12 months, but we still have to navigate through, some of this kind of liquidity crunch that will take a while to unwind. But when it does, I think all these forces under the surface here, when they come through, are going to be very powerful and very exciting. So I, as always, remain long-term optimistic in this ecosystem. But looking forward to that kind of, end of 25, early 26 acceleration phase.
Hopefully. Yeah. Well, Arjun, I really appreciate your time here. It's been fun to catch up. And looking forward to checking your predictions 6 months from now and seeing how we did.
That sounds great. I'll look forward to that.
Okay.
Hopefully we're in a better place. Thanks so much, Alistair. Appreciate it.
Likewise. Thanks again, Arjun. That was Arjun Dev Arora, and wow, we covered a lot of ground, from the rise of one-person billion-dollar startups to how AI is reshaping fundraising and operations. Arjun offers a wide aperture on where venture is heading right now. I especially liked his point about how we're at the inflection point, and whether you're a founder or a fund manager, he describes what it means to navigate through this market right now. So, hey, if you like this episode, please click like and hit the subscribe button, and share this podcast with someone you know. That'll help the podcast grow, and it would mean a lot to me. And if you're on YouTube and you're into how AI is shaping work and society, go and check out my other podcast, The AI Cognitive Shift, which I produce in partnership with AInews.com. So that's it for now. Thanks for listening.